Yo, what's going on with y'all? We got parts 2 and 3 of the 9-part series here for the intro to day trading. So in this video, we're going to be going over candlesticks and trends within the market. So let's quit wasting time and just jump right into it. So when it comes to candlesticks, there's going to be two different types of candlesticks within a market. There's going to be bearish candles and there's going to be bullish candles. Now bearish candles is sellers, bullish candles are buyers. When it comes to candlesticks in a market, those are simply just representations of buyers and sellers within the market. So an up candle is just a representation of buyers, a down candle is just a representation of sellers in the market. Now, if we scroll down here, you can go ahead and screenshot this if you want. This is going to be a breakdown of the candles. So as we can see here, this candle is extremely full. It has no wick. This is a fully bearish candle, 100% full volume bearish candle. Now, when we jump to the second candle here, this wick insinuates that this red was at some point green up here. This candle was pushing up. So at some point, this second candle here looked like this first candle here. And the sellers took control of this candle and pushed it so far down to the point to where the green candle disappeared and it formed a red candle on the bottom down here. Now, to the third candle here, this is just a normal bearish candle. This is typically what you're going to see throughout the market. It has a small wick on top, small wick on bottom, but generally it's going to be in the direction that the candle's trying to go, either a bearish or a bullish candle. Now, the third type of candle, or the fourth, my apology, that we have here is going to be a neutral bearish candle. So, as you can see here, the body of this candle is quite small. Price was down here at some point. Price was also up here at some point. And now we're just kind of stuck in the middle. We're not necessarily sure where we want to go. So this candle is something that you could see typically before a reversal, before price starts to move in a bullish direction. Because this is just kind of like an indecisive candle, is what we call it. And then over here, all the way on the right, we have our least bearish candle. Why is this candle the least bearish? Simply because it is the opposite of our second candle. So, at one point, this candle on the far right looked like the candle on the far left. And buyers stepped in and pushed it all the way up, almost to a bullish candle. Now, that doesn't mean the buyers are fully in control. That's not 100% signs that the next candle is going to be green. That's just showing you that buyers have majority of the control right here because they were able to push the seller's candle all the way back up here. Now, everything that I had just said for the bearish candles also applies to the bullish candles. This is going to be the most bullish. This is the second most bullish. Why? Because this was a bearish candle and it got pushed up into a bullish candle. This is typically what you're going to see in the normal market on a daily basis. This, like I said again, same thing as the bearish neutral candle. This just means that the candle's indecisive. We're not necessarily sure what the next move is going to be. The buyers aren't in control and the sellers aren't in control. It's just indecisive. Now, the least bullish candle, like I said, it's the exact opposite of the bearish candle. At some point, this candle looked like the one over here on the left. And the sellers were able to push it all the way down to here, being that there's a large wick on top. So that could insinuate that buyers are losing their power and sellers are getting ready to go ahead and step in. Now, I'm going to go ahead and take you guys over to the charts and show you a few live examples of the candles and kind of demonstrate them on the charts so you'll get a little bit better of an understanding. So I'll catch you guys there. All right, what's going on, y'all? We're back. We're on the charts now. So the candles are going to be different colors. Let me go ahead and get this back to defaults for you guys just so everything is clear. Okay, here we go. So, as you guys can see, we have red candles, we have green candles all over the screen. And this is something that I'm going to get into a little bit later in the video when it comes to trend. But as you can see, we're really not going anywhere here. We're just kind of going sideways. So this is not ideal price action. This is not something that you want to be putting your money into when the charts look like this. But let's go ahead and zoom in here. So, as we can see, right here if we zoom in, on this candle at 1150, it had a very large wick on the top. As you can see, the wick starts up here and ends down here. This was a bullish candle all the way up here at some point, and the sellers were able to push it all the way back down to here. And as you can see, the selling pressure did step in, and the next candle was a very large candle to the downside. Now, as you can see, this is a great example because the very next bullish candle that we got has a very large wick to the downside, insinuating that buyers have stepped back in and price wants to go back to the upside. And as you can see, that's what happened here. The buyers pushed it all the way back up. They were able to push this into a bullish candle, and then price reversed and went back up. Okay, cool. So now that you guys have a baseline understanding of candlesticks and how the candlesticks work, the next thing we're going to go ahead and jump into in this video is going to be trends of the market. As we could see here, we're on the S&P 500, and let's just take a look. We're on the 4-hour chart currently, so every single one of these candle bodies represents 4 hours worth of time. So as we could see, ever since around April, we have been in a uptrend. So this is where the price is just going up. We're not down, we're not breaking, we're just continuing up, almost in a sense of like we're holding this line. So now let me get this out of here and we'll be able to go show you a downtrend. So right here, as you can see, price was in a downtrend. The overall trend of the market is going down. I could put a line on it and we pretty much follow the line the entire way down. Now right here, as you could see, we broke above the trend and we started to push back up. That's because the bullish order flow stepped back in. We were no longer in a downtrend. We started a small uptrend. Now this was just an uptrend to pull back to go further lower, which is something you have to be careful of. You can't just look at every single little break as a change in structure in a sense, or a change in order flow, or a change in trend. Because right here, if you would have wanted to long this in expectance of it to come back up because we broke the trend, you would have been incorrect because this was just a retracement to go further down. Now, if we go over here, I have it all drawn out for you guys, so it's going to make a lot more sense to the newer people in here, but an uptrend consists of higher highs and higher lows. And a downtrend consists of lower highs and lower lows. Now, what does that mean? Let's just say, for example, the price went up, we have a high right here, we came down, we have a low right here. All higher high and higher low means is that this high is higher than the most recent high, and this low is higher than the most recent low, signaling that we're in a clear uptrend. Now, if this low were to be below this low, this would not be an uptrend. This would just be a continuation of a downtrend, being that we did not hold the bullish structure. We did not make a higher high and a higher low. Now, it's going to be the same exact way for the downtrend. We're going to want to see lower highs and lower lows being put in. Now, what does that mean? We have a lower high up here. We have a high up here and a low down here. So we want to see a lower low being put in and a lower high being put in for confirmation that we are in a downtrend. Because if price were to come down, make a high, make a low, and then make a higher high, there is a high probability that we just continue to reverse and then we end up in a bullish uptrend. Does that make sense to you guys? So, lower highs, lower lows for the downtrend. Uptrend, you're looking for higher highs and higher lows. Now, let me go back to the 5-minute time frame to see if I can find a little bit better of an example of this for you guys. Because typically people don't trade the 4-hour time frame. Let's see. Hasn't really been the best examples recently because price actions have been a little funky. If you look on the higher time frames, we really haven't been going anywhere other than sideways. So there's not really clear examples. If I zoom down here and go back a little bit, we should have a pretty good example down here. Okay, cool. Yeah, so as we could see right here, I found a downtrend for you guys. This is probably the best example I'm going to be able to find. We have a high, we have a low, we have a lower high and a lower low, and then we have a lower high and then a lower low. So it's not going to be the best example for you guys, but not everything you're going to see in the market is going to be extremely clear and jump out of the screen at you. This is going to be on you guys to kind of do your due diligence and learn and understand the markets when it comes to things like these. And when we move like this, it's not super clear, but you need to be able to read conditions like this, or at least know when to avoid conditions like this. So that's going to be a wrap for the second and third part of this 9 video series for you guys. Drop in the comments if there's anything that you want me to touch on during this series that I haven't touched on yet. I'll make sure I include it in there for the future videos. But peace. I'll catch y'all in the next one.